been crazy, right? I did that space with Puru last night. We had 10,000 people came through that. We had 3,000 people on there at one point. It was basically three times larger than any other space that I'd ever hosted. What's up, Mel?
Nice, man.
No, man, that's awesome. And I don't think that's somebody that you've had before. So look at
He's
you
never done a
working that
space before.
edge. Look at you working that angle.
Yeah,
Celebrity.
he didn't even
It was
have
a great interview.
the Twitter app on his phone. I got him to download it and then do a test space with me to teach him how to use spaces, and then we did that space.
Well deserved, Gav. Well deserved. You put in the time for sure. We
Whew.
love you.
I appreciate it, Mel. Yeah. Thanks for tagging me in that tweet also this morning. We were shouting you out on space about Activision.
Oh, we'll talk about that, but that was nice.
Yeah, no doubt, no doubt.
Well, wait. I mean, everybody that was on Twitter Spaces last Tuesday got a firsthand look at some of the movement we were already anticipating in ATVI. If you were here with us, which we had a monster crowd, they definitely came, represented, stayed through the whole thing. We definitely called out Activision as being a possible interest alongside. Had some
How
nice
about
money
energy
flow.
across the board?
Energy, Blake. I mean, we killed it. I'm not going to take this space, Blake. That's not what I'm doing at all. I'm just trying to drum roll softly into what Gav's about to roll out for this Tuesday intro.
You're doing great, Mel. I appreciate you. What's up, Danny? Long time no see.
My wife is getting jealous. She's like, "Who's this wolf person that you keep talking to all day?"
Hey, she's starting to sound like Ben's wife. Yeah. This is why I can't have any love life at all. I've committed to the hermit life. It would not go well. They'd be like you talk to everybody but me all day. You'd be like, yep,
Gav is
yeah,
married to the game out here.
yeah, yeah. Joey knows. Okay,
Do it for the
all right.
spaces out here.
Yeah, well, with what they're also doing with the spaces, I mean, I don't know if I think I've shared with y'all about the Spark program. They've been giving us some more details, but it sounds like they're heavily rewarding those who host more spaces. That's kind of the gist of what's going on, and so they're basically telling me like, yeah, if you keep doing this pace, like all your spaces are just gonna be top of the algorithm. So I'm like, all right, like you asked for it. We'll just keep pushing them. And, obviously, with my Class A speakers, Class A plus, they deserve to be there. Okay. With that being said, I think we're going to go ahead and get rolling. We are about 5 minutes in. We have a couple hundred people in here. I put out a tweet about this. Anybody in the audience that can share that, that would be fantastic. Welcome back, everybody, to another Tuesday night episode of Market Sentiment and Stock Picking with the Money Crew. It's great to have you all back on. We had a really, really good last week one. I think I put out, all the picks from last week. So at some point, we could definitely go ahead and review those. I actually have those right in front of me here. So I do see, the stuff that people were picking. Exclusive will not be able to make it here tonight, unfortunately, but he was on a couple spaces with us earlier today. I do think Stock Talk Weekly is going to come in at some point, but I'm not 100% sure. And, we've got a real tight-knit core crew that is here and has been here every single week, and I'm excited to get rolling with the people that we have up here on stage. So without further ado, for anybody that's in the audience and isn't familiar, the way that this works, we have two main segments here, one of them market sentiment, one of them stock picking. We're first going to roll around, get everyone's thoughts on typically SPY, the Qs, overall markets, right? We talk a little bit about money flow, technicals, whatever is your specialty and perspective. Once we've made our way through everybody, and again, we are going to do 4.5 minutes max segment there. When we get to the 4 minute mark, if need be, I'll throw up my hand just to let y'all know we're at 4 minutes. Then we'll roll into stock picking. We're going to do a max of 3 stock picks with the same time limit, around 4.5 minutes. If need be, everyone was really, really good on those last time. We made all the quotas just so that we're keeping things on an organized schedule and movement. And then we'll go into just closing comments, final remarks towards the end. But I think everybody's got the gist of things, so we're going to jump right into it. Mr. Danny Nas, you've been with us all day. You've been a trooper. Thank you so much for being on here. Would you like to kick us off?
Of course. Great to be with all my friends here on Tuesday night. Wow. I mean, it's not to say that we can't expect this. I mean, growth in tech stocks have just been getting hammered, absolutely hammered. And the difference now is the money is rotated out and it's not rotating back in. And so, really, my eyes have been elsewhere. I'm not really even looking at tech um, from a swing trading perspective. Maybe day trades, taking some action to the downside. But yeah, I think you know we're just at this kind of juncture where this was kind of in the cards. This was gonna happen, so no one should be surprised. 2022 is going to be a very, very interesting year with the rate hikes, with the looming coronavirus. We have midterm elections this year. So there's going to be a lot of interesting developments throughout the year. Now there's some geopolitical noise with Russia. So, this is going to be a very, very noisy year. And I think we're just seeing the beginnings of an inkling of the beginnings of what to expect this year, which is one word: volatility. And I think we had SPY close right on my target to the downside today at 456.23. We closed at 456.51. So it held the back test, but it did lose that low swing high, or excuse me, that swing low, previous swing low anchored VWAP. So not really that great for SPY, and the Qs just look even weaker with a double top confirmed breakdown now under the 50% Fibonacci retracement. I do have a target to the downside on SPY at around 354 to 359. So we still got a little ways to fall, I think. There's always going to be some shining lights in the market. The ATBIs, SoFi got its bank chart. I'm sure we'll talk about that later on. But as far as the indices and the ETFs, really, I mean, the only thing I see that closed green was energy, and energy's been pretty strong for about 6 weeks now. So that's where my eyes are really right now. Everything else, you could take it to the downside. I don't personally like to play names to the downside. I'll play indexes or I'll play SPY and Qs to the downside, but I don't like to pick winners and losers, especially when it comes to playing to the downside. It's usually stairs up, elevator down, and these moves sometimes they just happen so quickly that if you're not on point, watching the screen with that trigger ready to go, you're gonna miss the boat. So better to sitting on your hands and waiting for the trade to come to you. But yeah, I just think the next, I think, week to maybe week and a half, 2 weeks, I think we're going to see a lot of volatility. We have FOMC next week. We got banks continuing to have their earnings. Goldman Sachs got hammered today on earnings this morning. JP Morgan didn't fare even as well on Friday last week. Banks will continue to report this week. We've got tech coming in a couple of weeks. I think it's a really, really scary time right now if you're holding some of these tech stocks, because just when you think they can't get beaten down anymore, wow, they just get hammered some more, and they keep pushing down and pushing down, and then buying the dip becomes buying the bigger dip, and then buying the really big dip, and then it's like, oh shit, I'm down 50%. So this is not a buy the dip environment. This is a wait for the bottom, wait for the consolidation, wait for the bullish structure to form, and then we start nibbling back to the upside. So beware that as we go down, we will have dead cat bounces to the upside. Do not get fooled into and lured into taking some of these trades. If you're quick and you're nimble with the swings, excuse me, with the scalps and the day trades, so be it. I am not swinging anything in this market right now. Cash is my position. Cash is a position. Cash should be your position if you are not experienced in this type of volatility. So I'll leave it there, let my fellow cohorts speak, and we'll talk about some individual names in a little bit.
Well said. And if anybody's been following our spaces today, you've already heard, a good couple of hours of myself and Danny, talking through these markets. Make sure that you're following him. Clearly, extremely well educated on the topic, knows exactly what his approach and his perspective is, and focuses on that. Doesn't try to be anything he's not. Doesn't try to say, this, that. Like, is completely open to saying, like, that's not my perspective, but knows what he's good at, in fact, great at, and approaches the market from that perspective. And I love it. Okay, let's go over to you next, Juicy.
Hey man, again, thanks for having me on. And I just want to tag along to what Danny said. And you guys know me, man. It's very hard for me to talk without charts. So I'm gonna throw a couple things as I go at the top of the space. The first thing I just posted here was the actual sector. Totally agree with Danny. Energy was the only thing that got slightly any money. They're out here selling, right? And now we're looking at the overall markets. You got VIX basically going outside up on the daily. So we're breaking out here on the VIX. And anytime that the VIX breaks out, it just creates this environment where you do not want to swing. Now, next thing I just threw up is a chart here of SPY. And again, like I said, I like to talk about what I'm looking at. I'm pulling up this chart over here so I can see it for myself. So SPY, I've been watching the support line that I've drawn from the lows from October 6th. We came in that area on December 3rd. We bounced off that area December 20th. We had a small bounce on January 10th. We actually cracked through that, and that's a big no-no. When you crack through a major support like that, and you look over and you see the VIX moving up, and you don't want to be trying to swing anything in this market. The last saving grace of this market is the 100 MA. If the 100 MA can hold, we'll be okay. But if we lose that 100 MA, we pretty much got a clear shot down of 451.16, which is that low from December 20th. And I would expect them to try to push it back up. Now, me personally, that doesn't mean I'm full on bear mode. I'm more of a trader that reacts to things. If price breaks that 100 moving average, I'm gonna put my bear hat back on, and then I'll be looking to short. Now, what's the long side of this? If price can get back above 459.60, which was the high of the day from the opening print today, we can start to see a small reversal in that 465.24. But I think volatility is here and it's going to stay. And like I've been saying um, since the end of last year, we're going to get into a new type of Fed environment where we are in an environment where most people have traded with the Fed backing them, right? So this is going to be completely new. This is going to be a completely new year. And what worked in 2021 will not probably work in 2022. So let me tell you about me. I'm pretty much in cash every day, right? I come into the market today. I was looking at DWAC. I was looking at Boeing. I got stopped out of Boeing, got back in Boeing, made my loss back, made profit. I hit DWAC. I was in and out. I was done. That's the name of the game right now. Being cash is a position. You are actually protecting your last year's gains by being cash, right? So I would strongly recommend that you, for me, I'm not swinging. My swing hat is pretty much done right now to pricing so I can see some type of reversal. But I would pretty much recommend focusing on trading less, focusing on staying cash more often. If the market runs and leaves you behind, it's okay. There's going to be a lot more opportunities some point down the road, but we really, really need confirmation. But again, I'm gonna keep it short so my other colleagues can go ahead and talk. I'm gonna throw the ball back to you, Wolf.
Thanks, Juicy. Yeah, appreciate it. Bringing some great energy here. Always happy to have people pin stuff into the top of the space. Always great graphics as well. I do like that weekly graphic. It's really great. Speaking of XLE, if anybody was on Stock Talk Weeklies, pick of the week, I was leaning towards XLE because I wanted to go energy, but then I was like, what if something weighs it down? So I actually just went with XOM, which is the largest component of XLE, and ended up with that 2.8% day. So hopefully that can keep rolling. Maybe we'll get some traction here. But good stuff. Thank you, Juicy. All right, let's keep it going. Money Mel, the floor is yours.
I'm going to be honest. Well, I think I have COVID. I went and got tested today. I thought it was a rapid. It was not, so I won't know for a while. I did not get to put in the homework that and due diligence I usually would. I'm just not seeing it across the board as far as creating a little bit of a bottom. I am still being extremely open minded to the fact that we have a very, and I want everybody to think about this. This is not a designated special, quote, quote, special um, options expiration in the sense of a triple witching or quad witching. However, you have leaps expiring this month. And think about all the people on this whole run up that has positioned into leaps into January. And so you're going to have volatility this week. It's just going to be there. And whether that means up, down, sideways, I don't know. I don't have that crystal ball, but I just want to kind of make sure everyone knows. And I saw a few Twitter posts, and again, I've kind of not been able to do as much research as I normally do because I have been out this weekend. But I think you've got like 125 billion rolling off of the options board this week, which is going to be huge. So not only do you have an options expiration, we don't necessarily have a known um, event, but you have such a big options expiration with this being the first options expiration since we've had COVID and some of those coming into play in that sense. So just stay nimble. Don't, and this I think is going to be the tone for the year. I think those gains that used to be posted that were seemed a little far fetched. Take your money when you have that money. Take that 20%, take that 30%. It's not the time to be a rock star. I think going into this year, no, we don't necessarily, like Pup said, we don't have the Fed behind us. We need to be a lot more diligent and don't expect those. And that's going to be really new for a lot of people that have just started this year that have only known in that market. But you have to save yourself in the sense that you need to think of both sides. And that's something I think this team is great at. Everybody on this panel, I'm so appreciative of because we're not painting, um, we're not pumping and dumping, like a $2 stock. That's not what we're doing here. We're trying to really come in with some sentiment and some good market insight that can help to lead the way. And definitely follow everyone that is up here. But now is not the time to get crafty. And I think we have to kind of push some of that gain porn that gets posted all over the place um, away a little bit. Take that 10, 20, 30%. If it is there in front of you, if you saw it on the street, you wouldn't walk past it. Take that money and go with it.
100%, Mel. And I hope when we first, best wishes to you. Hope you do feel better. From what I've hopefully seen from most of the people getting it right now, it's usually just about a 3-4 day, downturn with this current strain. So hopefully everything works out real smooth. In addition to that, once we get into the stock picking, I hope we'll get some dark pull and some other options chat. But thank you for being transparent and giving us your perspective right now. Okay, let's keep it going. Welcome back, Ben from StoryTrading. Great to have you on.
Hey guys, Wolf, how you doing? Great to be back. I got a little bit of a different perspective or maybe background as some of the folks over here. Just for context, usually I'm holding positions for months to quarters and maybe even years. And, I've been trading for 25 years and I'm pretty much almost always fully invested. And I saw this coming about 2 months ago. We warned our entire story trading community that risk assets were not a place you wanted to be. This was in mid to late November. So I just made changes around the margins, right? I sold off some of my most speculative names. I added some hedge. I'm currently hedging with PSQ, which is shorting the QQQ. So I'm really not surprised at what's happening. I think very few people have been through an environment with rising rates, and that's not just a matter of a technical correction or profit taking correction, but this is a re-rating that has to happen with multiple contraction that's going to happen. There's actual real fundamental impact and risk on companies that are not profitable, that need to access capital. So I think we could be just at the beginning of the pain, possibly. It's funny because I have this potentially maybe even more bearish outlook than a lot of people here, but I'm like 80% long, right? It's just how I have a different, I'm managing several $1 million and I have like 30, 40 stocks. So it's more like a portfolio management type of deal going on with my account. But I want to share a couple charts over here if I can on ARC and SPY. Let me do that. So a couple things I'm looking at here. I like to look at a longer term picture, especially when the daily moving averages break down. When I keep technicals very high level. I love my moving averages. When I see a break of the major moving averages of 5200, I switch to the weekly chart. So in ARKK, I've been calling for a test of the 200 week moving average now for about 2 months, which is let me pull it up, about about $73. We're at 77. So at 73, I think we're going to see a tradable bounce there. You can see how well it held up at COVID, that 200 weekly moving average. I do plan on playing that for a trade. Just for context, I trade with about 10% of my money. So like 90% are stocks I research really well with the help from the story trading community. I'm dedicated to holding them, to seeing through the quarters or whatever it takes to get my catalyst. And about 10% I trade, like fast money trading. So I think we could see a very strong bounce, but it could be a dead cat bounce, because there's another chart in there on that tweet that compares RK to the .com bust. And I think there's a possibility that's in the cards. I hate to potentially be the bearer of bad news, but I think we could be in for an 18-month stretch, possibly, maybe a 2-year stretch, where a lot more downside. If you look at the revenue ratios, price to revenue ratios on the growth stocks, they're still very high, still way higher than they were pre-COVID. So could go much further down. So I think we could get a dead cat bounce or relief rally or something at the 200-week moving average. I don't think that's the end of it. I put a SPY chart up as well. That's the weekly charts. We're at critical support here, 456 on the 20 weekly moving averages. Can we go down to that red line there, the 50-week moving average? I think it's possible. A couple things I want to mention also is sentiment-wise. There was some notes on Twitter which I verified. If you go to Google Trends and you put in like stocks, options, stock market, you can see that retail is really kind of leaving right now. And we've been in a very long bull cycle, and a lot of retail traders are getting completely burned out and losing their money. And I don't think they're going to necessarily come back quickly. So these are all things I'm looking at. One thing, though, that is a potential positive, which let me share this also. There's a chart here, and when can we see the bottom? I just put it up there. This is a chart which I'm actually thinking the first rate hike is when we'll see a bottom to this market. So markets are forward looking. They're selling off in anticipation of the rate hikes. And I think when the first rate hike happens, I don't know exactly, I'm hearing March or something like that. I think that's when the bottom may be put in. Now, I think RK may bottom before, possibly, SPY and QQQ, because it's gotten hit so hard. But again, just be cautious of this longer term outlook. What happened in 1999? What happened with the dot-com burst? Look at these revenue, these price to sales multiples on the growth stocks. Could it go a lot lower? I think it can. So 2022 is going to be a really tough year. I'm just trying to stay in the game. Like I said, I'm about 80% long, and with my 20% hedge in trading, I'm trying to stay in the game and kind of hopefully beat the market that way. Probably I'll be doing a lot of covered call selling this year. Last year I did a lot of put selling, which was very profitable, but this year I think I may be doing a lot of covered call selling. So it's going to be a different year. I don't think you can look at this as a typical correction. There's an actual change in the market with these higher interest rates. So be prepared for that possibility.
Very interesting. Do you think that that's going to affect certain areas of the market heavier than others?
Well, obviously any risk asset, right? But it's not just that. We got that risk asset selling off the last couple of months, but now we have multiple contraction with the profitable companies. Like the multiples are, I don't have the numbers in front of me, but I mean, they're historically very, very high for both the Qs and the SPY. So, you pull up your charts on the Qs and the SPYs, look at where those support levels are. Right now, I'm short the NASDAQ, not RK. Earlier in November, December, I was long SARK, to short the ARKK. That's come down so much. I actually have more confidence now that the Qs and the SPYs are going to crack at some point. So it always starts with the higher risk asset first, but in this kind of environment, which I think we may be in, nothing is going to be left untouched. Eventually, everything is going to go down, right? So there are spots in there. I'm a stock picker. We'll talk about our stocks. There've been 3-4 stocks that have done really well the last few weeks, so we'll talk about that. But I'm not trying to time the market because I don't have faith in myself to catch the bottom. Like, I'm in some really good companies I've researched well, and if I sell now, even if I know these stocks are going down over the next 6 months, but if I don't get back in at the lows, and then this has happened to me a lot in the past, where I think I'm brilliant. I'm like, yeah, market's going to crash. Let me get it. Let me go all the cash. And then stocks start rebounding, and all of a sudden, you miss out on a 1,000% gain over a few years on some great company. Like, I don't want that to happen to me. That's why I prefer to hold on to my core and then just hedge and trade to stay in the game.
Perfect. Thank you, Ben. I really like
Yep.
that insight and the research that went behind it.
Great. Thanks.
Okay. Vegas?
Hi, everyone, and thanks for having me up here, and good evening to everyone. Today I thought, tough day. I didn't really trade tons of things. I traded DWAC, have a swing on that one, and also Apple puts were in play, and some puts on SPY and QQQ and IWM. XLE was great. And watching the bank stocks because, we've had some earnings that are out of the way. And so when we go through the list of banks to watch, I am watching Wells Fargo, Citi, and Bank of America. So watching those ones because the earnings are out of the way. And kind of my favorite one's kind of been Wells Fargo. So I'll talk about that one later tonight. And just really watching things. My position size has changed, not going as heavy. Um, I'm still swing trading some things, but I'm certainly not blindsided that I'm being conscientious of the position size to reduce my exposure, and also I'm open-minded that I have to switch gears. I'm gonna have to switch gears. So I have been bearish in some sectors, and still keeping my thought process open-minded to other opportunities that are out there that potentially might present themselves, and just waiting to see what the market really brings to me. I mean, it's great to have all these ideas and all these alerts, but for some of these trades to go, I'm just waiting for confirmation. I'm waiting for the prints to trigger, and right now I'm just kind of waiting. So sometimes I'm in the trades and I'm like, oh, it's a bit boring for me because I love momentum, I love action, but I'd rather be bored and just wait for a trade to come to me, so at least I can go in when the time's right and then execute and then see the action come my way. And just being patient, and just being open to whatever the market wants to give me. So if it triggers bearish, I'll go in. Facebook's to me looking bearish too. It kind of was in a range all day when it opened, and I think it's heading lower. It could actually gap down as well, and Nvidia looked pretty ugly as well. So definitely, could see some, potential gap downs if there is a continuation on these pullbacks. So I'm just being, open-minded with the trades, but definitely not going as heavy. Although my goal was for 2022 to go heavier with my trades, but I'm being a little bit hesitant right now just because I'm not feeling, comfortable until I see confirmation on the setups. If they trigger, I'll definitely go in, but I'm not just going to just take a trade just because, you want to be trading. So I'm just waiting for setups to come my way.
Perfect. Thank you, Vegas. And Blake.
Yeah, once again, thanks for having me back, Gav. Good to be up here with all my peers. What's going on, everybody? It's great to have a lot of different perspectives on the panel. So it's great to have, day traders and position traders and swing traders and people that are looking at dark prints and technical analysis. So, for me, it's very simple. You need to have a system, and it's really simple for me. We've been in a 9-day downtrend. Technology is leading the downtrend, so your tech stocks are leading the way down. And the lone bright spot in the market has been energy. And I think if you've been in our spaces for the past 2 or 3 weeks, myself along with many of the other speakers up here, we've been spot on with energy. So if you look back, XOM, Halliburton, CVX, ERX, the list goes on and on. So energy has been that lone bright spot. Tech is worrying me. I'm not going to lie. If tech breaks below some key pivotal levels, I think that if that happens in that scenario, it could absolutely weigh on the rest of the market. So even though we're seeing this lone bright spot in energy, if tech continues to roll over, which it absolutely could, we've been in a prolonged bull market. It's going to be difficult to find places to put your money. Just look at bonds today getting crushed, gold doing absolutely nothing. So your precious metals are doing nothing, and then your alternative assets like Bitcoin and Ethereum also in prolonged downtrends. So it's going to be tough to find a place to park your money to earn a return on your capital. So it's going to be a lot of patience and picking the spots where you feel like you have an edge in the market. And you heard Mel say, hey, my goal was to come in, or I'm sorry, was it Vegas? My goal was to come in and trade with bigger size, but that is not the type of market that we're in right now to be trading with bigger size. Either you are taking your base hits with the volatility that we're expecting and that we're seeing. You can make some really nice money if you're playing some options or some futures contracts, taking these base hits, seeing this volatility. And otherwise, it's really, really difficult to get swing long anything in this market other than energy. Just about everything in tech is rolling over. And one of the things that's concerning to me is small caps, and especially growth. So if you look at growth, it's really starting to roll over. So we need to definitely keep an eye if we can catch a bounce soon, or if we're going to continue to see this weakness. And if this weakness continues, can we see rotation into energy, and what else is going to take the baton to hold these indexes up? So I'm still very cautious. I'm taking my base hits and really waiting patiently to get in with some size in this market. But right now is just not the time to do that.
Perfect. Thank you, Blake. Okay. Yeah, and I definitely agree with you. We had been, I don't want to say we, but definitely you and some others have been spot on with the money. Had, hit on energy. Some people had touched on financials, which had some great weeks. And definitely several other areas which have continued to outperform the market. With that being said, I'm going to go for the last of the market sentiment to my co-host, Stock Market News.
Overall, I don't have too much on this section. For a while, I've been saying the same thing the last 2-3 weeks or so. We really have to let this year establish itself. We were kind of just 1 week away from how we were December 31st to January 3rd, but everyone was thinking the market was completely different. And it still feels like we're in that early December market of just chop and going forward. A couple notes. Markets are forward-looking instruments. We're really digesting what we think is going to happen over the next 18 months or whatever it is. So, you really have to balance not necessarily what's going to happen, but what's going to happen versus expectations is what's really important. So, that's just definitely how I would shape your opinion on everything. Right now we are in that chop section, but something that could give us a certain direction is earnings. So we are at the very beginning, the just starts of moving to earnings. We've had a couple of the big banks. We have a couple more tomorrow. So I'm definitely all eyes there right now before I really make up any big decisions. We can all have some preconceived notions or whatever is going to happen, and then earnings comes around, makes us change completely different, and then changes the expectations for whatever. So stuff has snowball's effect, and can affect where we're at now. Who would have thought last year when we're, if you'd have told anyone before January of last year that we're going to be even talking about meme stocks, AMC, GME for more than a day, a week, or whatever, they would have thought you were crazy. And I'm not going to say that those are going to come up again or whatever's going to happen, but the only real point is that what happens throughout the year, it's impossible to predict it in January. So we have our expectations where we go now, and we kind of take what information gives us, change as that stuff comes to us. And I think that that's a point that was hit on a lot here is staying nimble. It's good to look forward and have your plan on what you think is going to happen. Make sure you have your plan on, okay, if it doesn't go my way, then what? But yeah, just always be changing, adapting to what the market's giving you as it's coming in. But yeah, really the point I want to get at here is earnings season is this week, next week, week after that. We're in the full swing of it. We're going to get a lot of information over this next week that will change opinions. So just be on the lookout for that. Absorb as much information as you can, and I'll shut up and let us get back. Actually, I want one more note. Make sure you're following all the speakers in this up here right now. We've kind of become a crew, the Tuesday night crew. We have a couple people missing, but make sure you check out everyone that is here. Give them a follow. It is free. They're all putting out amazing content. And the truth of it is, if you don't enjoy it, you can unfollow. It's super easy to do, but you are not going to want to because they're putting out amazing, amazing content. But yeah, back to you, Gov.
Dude, you're sounding awfully wise over there. You must be picking something up in all these spaces. I don't know.
Dude, listen, I want to be. I've been in 5 today. I know how I find all these spaces, and that's on a Google Spaces calendar. I was wondering maybe if we could share a little bit about that. You use so many spaces.
Oh gosh, we're right back into it. I feel like I'm force feeding the calendar to the audience today. Okay,
we can keep it off. Honestly, I thought that's what we were hinting at there in the setup, but we can keep it off on this last space.
No. We'll get some spaces calendar in here. 10 seconds. If you want to know what all of our spaces are, and you don't want to have to be on Twitter all day, just DM myself or Stock Market News your email. We'll add you to it. It's a free public Google Calendar. We have over 3,000 people using it now. That's it. Very smart people. If you have a big brain, use the Spaces calendar. That's all. That's the only way I can put it. It's big brain energy.
Do it.
Yeah. And finally, my DMs, we just made it through like 300 of them. So there's only like 10 people waiting right now. So that would be perfect if anybody wants to get on. What I will say, because someone did DM me, so somebody asked me, they're like, how can I see people's screens while they're presenting? So actually, Twitter Spaces, for anybody that's a first-time listener, because I actually know that we always have first-time listeners. It's amazing, because we do these at all different times and days and stuff like that. In fact, Twitter Spaces is just audio. However, if you scroll up to the top of the space, so open up the space, you'll see that the speakers have pinned posts into the top of the space. You can scroll through those posts, and those are screenshots of charts and other, posts that they put up there. So while there's no shared screen, we are able to add some context. And shout out the people who are in my DMs asking for the Spaces calendar. Those are coming in rapidly. All right, load me up. It's just big brain energy. Okay. With that being said, Joey, I think you got some stuff going on, so we'll come back to you in a little bit. However, we are going to go into the next part of the show, which is going to be stock picking. For this, we're going to do about 3 picks each. I will do my best to keep a running list of the picks. That way I can tweet them out afterwards. So if you did miss something in the audience, just make sure you're following the Wolf account. And you'll see all the picks afterwards. That's all I got right there. Let's get right into it. Let's start off with Juicy.
Hey, man. Yeah, 100%. Give me 1 second. I'm going to throw, again, you guys know I like to throw pins up top. So one thing we'll be watching, the first one is going to be Roblox. Here we go. So one thing I want to say is that I'm pretty much, again, not really looking to swing in this market. I feel like with the VIX up, you're going to see volatility all over. So with that being said, you need a planned approach for every trade. Every trade you look at, you need an upside trigger and a downside trigger. So for me, the post I have up top is Roblox. I'm looking to take this long above 82.46. And price target is going to be 89.70. My short trigger is going to be 76.75, and we have room down to the 69, pretty much 69 area. Flows are kind of mixed, so for me, I'm going to be taking. I prefer the short size due to the actual charts over the flow. And when the flow doesn't line up 100% with the chart, for me, I drop my positioning size. Right, I only go full size when I have either the market in my direction, flow in my direction, chart in my direction. If all that's not there, when things off, depending on what's off, I'm immediately dropping my size or just moving on. Also, I'm also bearish here on tech, but I'm scrolling down my timeline because I got to go down my timeline. Next one's gonna be ticker AMD. Here we go. You're pretty much bearish across the board on the higher time frames. We went inside month down. Weekly time frame. Well, technically, the weekly and the daily are the same. Tomorrow, the weekly separates from the daily, so I'm kind of curious to see. But if that daily chart breaks that 130, 160 area, we pretty much have room down to that lower day, which is 124.90. You also have the 100 moving average in the way to watch that, but the flows, again, are mixed, but the time frames and the charts are actually bearish. So, again, if I take this trade, I'm going to be dropping my position size. Those are my main two. I'm going to be looking to short tech. I'm bearish on tech going into tomorrow. I'm also slightly bearish on financials. I know Vegas said Wells Fargo. I'm also watching Wells Fargo, so I'm going to let her cover that. But that's pretty much it for me. I'm going to throw it right back to you, Wolf.
Perfect. Thank you, GC. So the two that you're watching are RBLX and AMD, and those are not necessarily bullish or bearish positions. Rather, you have triggers on them. And
That's true.
then,
Yep.
And then overall, you are bearish on tech.
Yes, 100%.
Perfect. Thank you, Juicy. Okay, let's go over to Blake.
Yeah, so like I was saying earlier, it's really difficult to want to add new risk or new long market exposure just in the current environment that we're trading in right now. My personal strategy is waiting until we see some sort of bottoming pattern and price above the 10 simple day moving average on the S&P or the Nasdaq. So for me, it's difficult to get long. I'll give you some names that are showing relative strength. So if you are looking to get long, maybe these names could offer some momentum plays if the market decides it wants to bounce and move higher. So first one I'll give you is Deere. Sorry about that. I almost got rugged. So DE, I really like DE right here. Industrials have been showing some relative strength. So I like John Deere. Bull flag above the 10 and the 50-day. It's showing some relative strength above the 385, 386 pivot. So if it can get back above today's high, which was 388, I would look to see this make a move towards 400. So John Deere, I think, could be a nice play if we see some moves towards the upside. Another one, Juicy mentioned it earlier today. It was also on our playbook for our members, was Boeing. So BA, still like this setup. It's still just a bull flag. Didn't like to see the wick today, but given the market conditions, not too bad at all. So Boeing, I think if it can get above today's high, you have higher probabilities that it's going to go higher, provided the market wants to remain in this uptrend. And then, I like to do some bottom picks. Not that I'm a bottom type of, trader, but I know a lot of our listeners are, and they like to buy things that are, quote unquote, cheap. If that's the case, what I like to look for is, some sort of bottoming process put in, double bottom, some sort of, bullish divergence. And then I look to see if there's price that's, consolidating above some important moving averages. And what I'm seeing is some of these casinos, and one of the ones that I like is Wynn, WYNN. So if you're looking to get something cheap that's been beaten down, that could be, putting in a bottoming formation before making a move higher, I like Wynn Resorts. So not my typical, I want to, typically I'm focused on momentum and tech, but that's just not where I need to be looking right now. Last week I've been really focused in energy. It's tough to add to those because they've been running so far. So this week, I thought I'd give you some new setups that I think could be some potential winners if the market swings back.
Perfect. Can you run through those tickers for us once more?
Yeah, so we got DE, so that's John Deere, and then we got BA, Boeing, and then we also have Wynn Resorts, so WYNN.
Awesome, thank you. I'm curious, is there a part of you that wants to put a energy name in there at all?
Yeah, so XOM was on our playbook for today. So XOM triggered for us today. It was a bull flag. So we can throw XOM in there as well.
There we go.
Thanks, man. I was leaving my energy names out of there. I was like, I can't just hit on energy again, you know. Appreciate you bringing
Hey,
that
man.
back.
If it ain't broke, you know, that's what we do. Keep it going. Mel, you ready?
I think I am. I opened up to a very nice green trade today on ATVI. We were supposed to be being a sector. And so let's kind of talk about that a little bit since we do talk a lot about money flow. You will tend to see the ebbs and flows that come into your industry groups. That's what you want to see. A rising tide will lift all boats. And that is definitely apparent in energy names that, Blake and a few other panelists have been mentioning the last few weeks that created some great opportunities. You have this whole sector coming up together, right? What was a little bit different about ATVI was you didn't necessarily have all of the electronic gaming stocks acting or seeing the same activity. And so it was definitely something that was flagged as unusual. I was active in the $70 calls for this week. That was a position I started on January the 11th. What was interesting was they were closing out of the $65 calls, coming into the $70 calls, which was weird for it being shorter dated. But knowing that we had some unusual activity kind of correlated, and the chart just looked good. And more than anything, what I want to highlight, and I don't really like to do the gain porn thing. That's just not my style. But one thing I would like to note is Friday, the relative strength that ATVI had when markets were pulling back. And that's so important to pay attention to. So if you happen to have, a grid of stocks that you're watching, and when you have red tape and the major indices are making lower lows, but you have something that's maintaining, that orb, or you're making higher lows, and it may not seem much intraday, but think about that relative strength and what that really means for that ticker. You've got something that's bucking the trend, and while you have most of the market following suit with your major indices, you have something showing a little bit of spark. And I know Pup said it. I know it's been something that's been discussed here before by so many of the panelists. So I don't want to not miss, I don't want to not call on anybody, but that's so important, that relative strength. And think about that seriously when you're watching a stock that you're in and going, wow, the market's puking and my stock's just like making a little bit of a higher low. And it may not seem like much, but your stock is showing relative strength. And typically those are the stocks that tend to lead us. Should we get a little bit of a bounce or more participation in the major indices? So just wanted to call that out. Otherwise, I am absolutely I just can't not be long China names. I know that there is headline risk, but the dark pool activity that has come in, and no, we haven't necessarily seen the corresponding options flow, but I think sometimes that's what we typically tend to see is a little bit of positioning into the dark pool, which is going to be your common shares. There's not as many people watching that as there is options flow. In options flow, you don't have a dark market. So whatever is coming through is visible to me, you, God, and every institutional fund that's trading that. So we're all getting that advantage and being able to see where there is positioning. I just think there's a little less people watching some of the dark pool activity, and they have been relentless in China. Today, I have posted on my feed, we had 2 million, let me see, PD, which closed green at the high of the day, showing extreme relative strength with 1.1 million shares. We also had BABA with 2.54 million shares. MCHI, which is a China ETF with 2.37 million. You have some rotation. And while I know that China has been subject to a lot of headline risk before, it's getting really hard to deny. And if I don't actually say something, I don't feel like I'm doing my part. That may be one of those scarier trades to get into. But I think you have a whole different dynamic going on with the international markets than what you have right here in front of us with our own US markets that have been very supportive of this upward trend. So I'm long China. I actually got long YINN, which is there is a yin and a yang. So you're 3 times bull if you're yin and 3 times bear if you're yang. On the China markets, I did go ahead and take a leap position into the $12 calls going out to 2023. I think China is going to start to find some support here and turn around.
Thank you, Mel. I'm, loving the hot take, rolling with the China stocks, getting us back into it. I'm definitely a little scared of certain areas. I think a lot of people see Bob as a leader, and the Bob chart kind of terrifies me right now. But we roll with the punches. We take hot takes. That's how people, that's how the big money's made. Can you run through those tickers for us once more?
Okay, so we touched on ATVI, which is a null trade for me because there was a buyout. And PDD.
Wait, can you say it was a null trade for you? Meaning?
Well, it was what we talked about, and it was my top trade last Tuesday. So it's a buyout. What I don't want anybody to think is it's still active. Once you have that, that's not something you want to chase. Those option contracts juice, and that IV is so high. It's already something on the table. And of course, there may be discrepancies with like the pricing of the buyout or anything else. But if you're chasing that rabbit hole, you're looking the wrong direction and you're missing everything that's occurring in front of you. So what I don't want people to do is to think that's like a live trade. That was a follow-up to what we offered last week to our Wolfpack community on Tuesday, which was amazing because we did have such a huge move, but not active now. I just wanted to add a little additional commentary. So we're closing out ATVI. We're talking about China names. I talked about BABA, BABA, PDD, and YINN, which is 3 times leverage. And these are longer swings. This is not something I'm positioning into weeklies. I'm actually only day trading right now for any shorter term positioning.
Okay, thank you, Mel. BABA, PDD, and YINN. Perfect. Again, if you're listening in, first off, I put, I think, a pretty fast and pretty great meme about the calendar into the nest. It's the last pinned post. Feel free to check it out if you haven't already. I think everybody could get a little good chuckle out of that if you've been in a lot of my spaces. Number 2, be sure that you are following the speakers up here. Again, this Tuesday night panel is special. We've been doing this for months and months and months on end. They've carved this time out of their schedules. And again, every single person that is up here as a speaker, besides myself, Joey, who works with me, and Stock Market News, everybody else supports themselves full time by trading and investing. That is literally their job, their life. So we're not just bringing up, people do this on the side or something. Like, this is a dedicated panel, and they're taking that knowledge and skills that they've gained. And between them, I would say we have, several decades, if not over 100 years of experience potentially of investing and trading from them and delivering it for free to people in the open every single week consistently. In the good markets, we did this through all the rough markets over the past couple months. Doesn't matter. We still came and found opportunity. So please make sure when someone's talking, you're clicking in, checking out what's in their bio, giving them a follow. We have technical experts, option flow experts, people that are working in fundamentals, momentum, and everything in between. So you really do have to love to see it. All right, Ben, coming to you.
All right, how you doing? Let me throw up a chart up here. So a couple stocks I want to bring up, and then maybe talk about a couple shorter term trades. So first thing I want to bring up is CFVI. This is the SPAC that's merging with Rumble. Now, this is a stock that has been chosen like 3 weeks in a row in our community as a trade of the week, and it's been spot on. It's been up every week the last several weeks. I want to go back and talk a little bit about the genesis of this, which I'm sure a lot of people are aware. But, story trading, for those of you who don't know, we look at, especially when we're talking about trade ideas, we look at 4 pillars of information. It's fundamentals, sentiment, catalysts, and technicals. And we try to understand all of those aspects, all of those pillars of information when making a trade idea. So this all started with DWAC, which our community was all over, the night that the acquisition of Truth Social was announced. We were all over that, and we developed a thesis that the sentiment was going to be super, super high for this, even though the fundamentals are likely garbage. Our community made like 6 figures. A lot of people in our community made like 6 figures just in one day. We got in at like $12. People sold out, 80, 90, 100, 150, whatever. That was a crazy 2 days for DWAC. And that sentiment, I think, is still in play. And it's funny, you heard me earlier have a very kind of bearish outlook, but I'm still a stock picker, and I still think there's opportunities out there. So I think that opportunity, that sentiment that was driving DWAC, I think is very much going to help CFVI, which is Rumble, in a way that could make it a much better trade than DWAC, because DWAC has a lot of risks to it. First of all, it's overvalued, fundamental issues. There's a death spiral financing that they put together, a $1 billion pipe that's going to cause the stock to like crater once the merger actually happens. So, but I'm trying to ride DWAC's coattails here, because I put a poll out there. Can DWAC and CFVI be the GME, GameStop, and AMC of 2022? And I think 60% said yes, 40% said no. And despite the fact that you have a lot of retail getting burned and retail money going out, I think that these two can stand out because you have a lot of new money coming into DWAC. You have people, they missed the entire bull run of the last several years, and just in like December, this month, just in this period now, because of sentiment and political support reasons, they're buying these Trump stocks. So, the thing with Rumble is, so now you get that sentiment benefit with Rumble, but they also have a real business, a real growing business. And in fact, we are interviewing, we do some interviews on our own on YouTube Live, and we're going to be interviewing Funware, PHUN, this Thursday. We'd previously done a Twitter Spaces with them, and we did a poll like, hey, should we do YouTube Live or Twitter Spaces this time? And a bunch of people said, hey, well, why don't you do Rumble? So we reached out to Rumble to see how we could do a live stream, and the customer support there was amazing. I mean, this team, they're hungry, they're motivated, they're like emailing me and emailing me like at midnight. They're setting up like screen shares the next day. They're like getting people on board, and the onboarding is so easy. With like a click of a button, you can import all of your YouTube videos onto Rumble. So I know this is a controversial stock for political reasons, but the fact of the matter is we're trying to make money here, and you can't doubt that they have a niche. They have a niche that's growing super fast. Technically, they're making it very easy to onboard people. So this stock, CFVI, is actually my largest position right now, both in warrants, in regular equity, and in call options. And it's been doing great this week, kind of following DWAC, but just a much, much safer play than DWAC. Now, I don't know when the exit is. I think we have about a 2-month period here, probably until at least the launch of Truth Social, or until the acquisitions close. These are SPACs, then you may see them, go down. But until 1 or 2 of those events happen, I think these are stocks you can actually buy the dips on. But again, I'm staying away from DWAC because of the reasons I told you. So let me just pause there. I have one more if we have time, but any comments or questions on that one?
No, I think that definitely is one that we've actually chatted a lot about in Spaces today. We talked about that in our morning space where we opened with Gavin was pointing it out. Stock Talk Weekly was on there too. They actually were, that was posted in Stock Talk Weekly's Discord. in this morning when DWAC had the initial thrust upwards, but CFVI was still negative right around, I guess it was around 10 a.m. EST, maybe even a little bit earlier, 9:30 a.m. EST. So we did see some buying through there, and then we actually also discussed that in Power Hour as well, with people kind of taking some profit off the top towards the end of the day, not worrying to worry too much. But I do like the look of it, and kind of agree with you that there definitely is continued potential to run. Right, we're not at the all-time high right now. It isn't as volatile as something like DWAC. So if I'm just looking real quick on the charts, on the session chart, just pulling that out, just going from that all-time high, looks like it actually is in a great position right now where you anchor the VWAP to that all-time high candle, and it broke through it today, but then it actually pulled back below it. And if that could break back through that all-time high, anchored VWAP, that's exactly what happened with DWAC today. And it was able to hold it, and then it soared. So definitely liking that one, and we definitely do have time for another.
Great. Sounds good. And, my strategy with this, I have a large core position, which I intend on holding at least until those catalysts happens. But in the meantime, as far as day trading, I do day trade like 5-10% of my core position. So, do whatever you want there. But I scalped a little bit, trying to, sell the tops and buy back in a little lower. So lots of opportunities there. The other one is a VIP pick from our community. It's ticker symbol RELL. It's Richardson Electronics. So this has been going around in our community for like 6 weeks. It's up 24% since it was introduced to our community. We've done a lot of due diligence on this. We've had multiple presentations. We interviewed just Thursday afternoon the CEO and the COO and another executive of the company. And as a result of all that, we had a kind of final presentation for our community last night, which I had put together, which will go on YouTube next week, kind of summing everything up. So Richardson Electronics, what I'll tell you is, can this be, and you see a pin at the top, the perfect combination of growth and value? What really got my attention was the other week they posted 30 cents EPS, which is a sequential increase from 20 cents, year-over-year increase 5 cents to 30 cents. They have a dividend even. They're in very, very hot technology spaces in green energy. They're dealing with something called ultra capacitors or supercapacitors, which is a type of battery technology that's replacing lead acid batteries. Right now, most of their business is in wind energy turbines. They hinted that they're going to get into solar. They already have some deals with EV cars and EV charging stations, locomotives, EV locomotives. They're replacing the batteries. So we're talking about business that's like tens of millions of dollars coming in for this $200 million market cap company. And we've done some collaboration with someone who does financial modeling in our group. And he was saying in a year they could double their earnings. So they could be on pace for close to $2 EPS in a year from now, and the stock's at like $15. So this is a stock that has had relative strength and outperformance, but I could get taken down with the NASDAQ, right? So it's not like a trade for this week. This is something I'm holding. I anticipate I'm going to be holding this for like 4 quarters, RELL, right? So that's the story on RELL. And then you have any questions on that?
No specific questions on it, but I appreciate the insight.
All right, and as far as like trades, like quicker, shorter term things, I mentioned it before. I'm going to be playing the 200 weekly moving average on ARKK to the upside for a quick trade. It may end up being half a day or 2 days. We'll have to see how it goes. But also, I'm short PSQ. I'm long PSQ, which is short the NASDAQ QQQ. That's something more of a swing. I have pretty good confidence in that. I think the NASDAQ and SPY are going to break down. If it doesn't, I'm good. I'm 80-90% long, but that's my hedge. And so that's something I think that may work out here in the next few weeks.
Perfect. Thank you, Ben. Yeah, those are really good. So CFVI, RELL, those are both longs. PSQ is also a long, but that's a swing. And then ARKK, that's more of a trade.
Yep, exactly. There you go. Thanks.
Perfect. Thank you. Okay, let's go over to Vegas.
All right. Not a really big list, but Wells Fargo, as we know, the earnings are done, and they were one of the banks that reacted positively to the numbers, and the numbers did climb 3.7% on Friday on above average volume. And we know that the stock prior to earnings is actually rallying into the results there. So I think it's definitely one to keep watching. It looks like, the stock's obviously one of the stronger ones. And I think that we could see this have a continuation. I am waiting. I don't have a position on Wells Fargo. I am waiting for it to break $58.75. If it does break above that, then I'll go long and we'll take it looking for this to go towards $62.50 and $65. If it happens to go below, though, 56.25, which, we're not really far from there based on today's market, and I don't know what we're going to see tomorrow with these bank stocks, but if there's weakness in this one, just based off silo effect on the XLF, and this one, and Goldman Sachs didn't help at all. So if this one does go under 56.25, then, might look to get a put on it. But I would hope that maybe it doesn't do that and that it just continues going up. But anything's possible. Hope's not a strategy. So whatever the market gives us is what I'll look to trade. So definitely watching that Wells Fargo. One of the other ones that I like that's been a really nice trade and still active in that one is Cat Construction. That is a beautiful chart, and really like the setup on that one. The earnings are coming out soon, but not this week, so not concerned about this week. But in the market being volatile the way it's been, this has stood out, and we could see that even today it had a high of day of 230.43. It had a beautiful pocket pivot. It actually has, to me, when I look at the weekly chart, it looks to me that it's on a beautiful uptrend. If we take a look at where the stock has been trading, back from even December, this is just trending to the upside. So definitely one to watch for some continuation actually to the upside. So I am comfortable on a swing trade on Caterpillar. And I think one of the other ones, that StoryTrading did talk about the other one that everyone's kind of been trading today. And I really like that Rumble story there on that CFVI. That one's looking great. And that's pretty much really the only ones. I still am bullish on Carnival Cruise. I know I've talked about this many times and still love the setup. I still think the chart has strength. I still like this weekly chart. I don't really feel like, although it's kind of been flat right now, I still think that when you look at the weekly chart, I still see a lot of strength on the actual chart. I still see volume coming through, and there's still some strength on this. And it's also showing to me as well on CCL that it looks like it's on a new uptrend as well. So one to not take your eyes off, especially those of you that like to look at, bargain stocks. I kind of like this one for bargain for COVID comeback play. And so I'm still, like long on CCL, and I still like it. So it's not, it hasn't reached that point where it's like, oh my gosh, this is really deteriorating. I think it's still one of the best cruise stocks, um, regardless of the volatility, because of the fact of where it's priced at, and has a strong future. I also like the fact that the company did mention that it is forecasting posting a profit in the second quarter of 2022. And as you know, I have been in the travel sector in the past, in my prior days in the corporate sector, and there has been a lot of advanced bookings for the second half of 2022 and into 2023. And that was before the pandemic devastation, and those bookings are still on the books. And so I think that going forward, I think we'll see this stock have a lot of future reversals to the upside. So I like the fact that they did give a very positive note to investors and that the company did state in their December update that their sales also grew to 58% in the fourth quarter of 2021. So when I hear all this information, this is a great comeback story. So definitely liking CCL still as well for a long term. So definitely not looking at CCL, especially if you like options. In my opinion, like I've said before, CCL, you should really be looking at, 2023 or 2024, a further outstrike, go out there into those leaps and, take advantage of the bargains on this particular company and, of course, do your own diligence. But that's kind of the ones I still like. So that's it for me.
Perfect. Thank you, Vegas. Would you mind running through those tickers once more?
Yes, it's CCL.
Yep.
WFC for Wells Fargo. And I think I overlapped the one with StoryTrading. So
Okay.
really just those two.
Okay, perfect. And CCL, that's more of a long-term one.
Yes, that one's for long term.
Okay, awesome. All right, Danny, we're swinging all the way back around to you.
Oh, sorry, and cat for swing. Cat.
And Cat.
Sorry.
I like the cat setup actually. I think we're coming into my target zone right into earnings. So was looking between 231 and 237 for a wave three, sub wave three up top here. So cat does look really good. So I like that pick, Vegas. Before I start, I just said, talking about the Google Calendar, I always get a kick out of when Gavin tries to kind of like sneakily put it in. He's the funniest as far as trying to sneak it in. He's so like obviously funny. It's just over the top. So, all right. So yeah, I mean, let me actually just reiterate a couple of things. So Cat, I definitely like that from Vegas. DE, been in that for a little while now. DE from Blake, that looks like a really solid trade right here with that bull pennant watching the same exact thing. And Arc K, I don't know if you remember, I know you do so many, you've probably done like 50 hours of spaces today, Wolf, but you asked me to chart Arc K earlier today. And I mentioned,
remember.
Right, so the level that story put out was the same exact level I told you was the 1618 extension to the downside. It's right at that 200 SMA from the weekly. So I do like that also for potential bounce play. So definitely three solid picks there. I'm going to go, let's see. I'm watching ATVI and Microsoft. I agree with what Mel said in regards to ATVI. The IV is definitely quite present there with that monster move. What I'm watching though is Microsoft. So Microsoft is coming right down to $300, and I believe it's right at that 618 extension, or excuse me, 618 retracement. So watching Microsoft here on this news, it sold off. It rebounded a bit and then it just continued to the downside. So there still might be some downside action. I'm going to just be very curious to see how it reacts at 300. We had SoFi come out with they received regulatory approval to become a national bank. They were up 16.7% after hours. And ironically, they also made a 52-week low today. So I thought that the irony was pretty interesting there. And so I do have them closing under the wedge breakdown. So just going to be keeping an eye on it. Don't think it's necessarily a trade, but something that we should definitely keep an eye on. Going back to energy, OXY, that had a nice breakout today, although it wasn't super convincing. It was a breakout nonetheless. So that's Occidental Petroleum. ZIM and FCX, two names that I've been talking about for well over a month. Still continuing to the upside, copper play. ZIM finally breaking out to the upside, shipping play. Outside of that, not really that much. I have my basket of stocks that I day trade every day. they're not necessarily conviction plays. It's more about, I know the personalities of the stock, I know the levels, I know how to play them. If I see an opportunity to take a trade, I take a trade. But I'm not necessarily looking for any of those particular plays with conviction to the upside or to the downside. So, but also looking back, over the last rolling 7 days with KWEB, the Chinese tech stocks, and EEM, which is emerging markets. Those are your three top sectors over the last 7 days. I'll post some charts up top. I'll put Microsoft up there. I'll put SoFi up there, and I'll put Oxy up there. Those will be my three picks. Oxy, Occidental Petroleum, OXY, Microsoft, MSFT, and SoFi, obviously SOFI.
Okay. Oxy. So is ATVI in there?
No, not for the same reason that Mel mentioned. It's just
Right.
the move is made, and
Okay.
so if you even think about buying up here, for a couple of reasons. Actually, number one, it got rejected off of its supply zone to the upside. Number two, it got rejected off of its 618 retracement. So to me, the play would be to the downside on a slight partial gap fill. I don't think it comes all the way down to fill the gap. But a lot of the times when you have these news events, the first rule, like the first rule of Fight Club is you don't talk about Fight Club. Well, the second rule of news events like this is you wait 3 days. You wait, the 3-day rules in play. You don't really touch the stock for a few days. You let the noise settle and you see where you're at. But with this now looming, waiting for, I think I read something in the news that there might be some regulatory issues for this merger or for this acquisition from a monopoly perspective. That's always going to be looming. And so until that deal is done, I wouldn't touch Activision. However, on Microsoft's side, I like trading Microsoft personally, and I really love trading stocks that go right near those big round numbers. You generally get nice bounce plays off that, $100, $50, $200, $300, $1,000. That's kind of the trader I am. I like to take opportunities like that. Like I was trading, Nvidia the other week around 300, and when Goldman Sachs was near 400, same story. So I really I like how the types of plays go around their nice round numbers. So, but yeah, like I said, just going back to reiterate what we've talked about on previous spaces, I'm preserving mental capital here. There's just you can sit here and you can day trade and you can scalp all day and you can make a nice chunk of change, but at the end of the day, is it worth your mental capital? For me, the answer is no. I would rather wait for this market to settle down.
It fades away, and I'm not really sure why it does that.
Yeah. Okay, cool. I just wanted to make sure I get it right. Perfect. Okay. Let's go over, Evan, are there any names that you want to throw out this week?
Listen, I'm much more of a long-term investor, and I do have some thoughts on names, but the truth of it is they're not really ones that I kind of want to give out in this space as predictions or whatever. I'm really watching Netflix for earnings, but I don't like trading around earnings, so I don't really want to kind of put out there and recommend it. It was my trade of the week, just kind of in that environment, in that closed window or whatever it is, closed room. Yeah, I don't really have anything. Make sure you're following all the speakers up here, and yeah, I appreciate that.
Awesome. Thank you for, being transparent with it. Okay, we are probably going to now move into just any final comments, wrap-up thoughts. Once again, amazing panel. Much love to everybody that's been up here and through it. I know Mel had to drop off, I think, for a bit. But to everybody that's still up here, as well as Mel, you can just look up Mel Stone and you'll find her. Make sure that you are throwing them to follow. Myself and Stock Market News, this is our 8th hour on Spaces today. Like, we have eaten, gone to the bathroom, done like everything like on Spaces today. If you're enjoying, if you're appreciating, like, please, we would love to have you join up. We're doing this all week. Tomorrow, I only have 2 spaces. That's literally just because I'm traveling. I'm traveling tomorrow and I'm still doing 2 spaces. And then on Thursday, I'm right back to it. I got 5 spaces on Thursday, right? So this is just back to back to back how this is going. So please do make sure that you are joining up. In addition with that, real quick on the calendar, because I did talk about it beforehand and we made the meme, so we might as well. One more time, if you want to know when all of our spaces are, if you don't want to have to be just like, whoa, when's this space happening? Well, when's the crypto space? When's the technical analysis space? When am I going to get my stock picks? You don't have to be doing all that. All you have to do is right now click on my profile or Stock Market News. Both of our DMs are open. Anybody, it doesn't matter if we're following you or not. You can send us a DM still. Shoot us over your email, preferably a Gmail, and we'll add you to the Spaces calendar. We have over 3,000 investors on the Spaces calendar. We have CEOs, hedge fund managers, people with 1 million followers, verified people. Twitter employees have DM'd us and asked to be on the Spaces calendar. We know it works. I get amazing feedback from it. Just in the last 24 hours, 400 people have joined onto that Spaces calendar. So we love to see that. So just slide into those DMs and we'll get you on there ASAP. Big shout out to Joe Feuerstein, Joey the man, who is on the panel right here, who has helped get so many people. He's added hundreds of people literally to that calendar today. So if you're not already following, Joey broke through triple digits today, which we love to see. He's a big dog now. So it's great to have him on the space. Joey, as we walk into wrap-ups, is there any closing words that you want to say on the space?
Yeah, appreciate the kind words as always, Gav. But yeah, it's real quick. Big shout out and thank you to all the phenomenal speakers up here. They're putting out great stuff all the time. So everyone here should do yourself a favor and definitely check them out. You will not regret it. So major shout out to them. And also big shout out to Wolf and Stock Market News, our 2 great co-hosts. And really when I think of, Finchwit and Spaces in general, I think of those 2 guys. They're putting out phenomenal top tier spaces with the best speakers all the time. So if you're into the Cole Finchwood scene, if you want to learn about trading, investing, crypto, NFTs, whatever it is, this is the place to do it. So be sure to check everyone here out and you'll learn a lot. So yeah, thank you for having me up here.
Pleasure. Perfect. And thank you to whoever. And please, Gmail's best. If you don't have that, I hear we got some Yahoos coming in, some others, but I do need your email to be in the DM. So please make sure that's in there. Can't add you based on phone number, username, anything else. Throw your email in there. At Canman282000. I see no email. Send over that email, my man. Just calling them out. You know how it is. All right, no, I won't call it anybody else, but make sure that Gmail's in there. No, I'm just messing around. Okay. All right, with that, we're going to keep rolling into the wrap up. Let's start out with Juicy.
Hey man, again, thanks for having me on. I just want to start by saying again, I love doing these spaces. Follow all these speakers. Like I said, the stuff we provide, you really can't find this on YouTube or anywhere else. Now, if you're listening and you're brand new, heard a lot of people say, "Hey, this market kind of scary. I'm not swing trading. A little bit bearish." That doesn't mean you throw your hat away, you walk away. I mean, there's money to be made on the downside. Like the shorts make money. There's the elevator down, then the escalator and way up. In order for you to play it, though, you need a planned approach. And that's my best way, my best advice to anybody listening. You need a planned approach. You need to have upside levels and downside levels. And whichever way that market goes, once it starts hitting those levels, you start reacting by buying either your calls or your puts, and then you start managing those trades. And as long as you're using proper risk to reward and you're following your process, it doesn't matter which way this market's going. As long as it's moving, you should be making money. But that's it for me. Again, thanks for having me on. I'm gonna keep it short and sweet, and I'm about to run into my live stream with my team. So again, guys, thanks for having me on, and have a good night.
Take care, Juicy. Appreciate you being on. All right, some of y'all in the crowd are getting real funny up in the DMs. No, I cannot add you by your OnlyFans username, and no, I cannot add you by telephone number. But thank you for asking. Appreciate y'all. Okay, Vegas. Any closing thoughts?
Appreciate being on here tonight, and just want to say, just follow where the money's going and whatever trade opportunities come your way. It's important to execute, and especially if the trades are triggering the levels that you're watching. And if not, if you don't execute, either you're bull or bear side, then obviously you're just not gonna take a trade opportunity where you can actually bank. So, follow your trade plan, watch your risk size, and wait for the setups to come to you. So I wish everyone luck this week, and just go in the direction of the market. If you have to be a bear, then be a bear. We love being bulls, but if you got to be a bear, just be a bear.
Thank you, Vegas. Completely agree. You got to follow where the money's going. Okay, Blake.
Yeah, once again, I just want to say thanks for having me up. It's been a fun and interesting talk. As always, love looking forward to these Tuesday calls. I think it's been mentioned before, everybody up here is offering great, feedback and helping you make more informed decisions with your trading and investing. So make sure you go ahead and give everybody a follow, and obviously send that Gmail over to the Wolf account. It's a huge alpha tip, so make sure you do that as well. I'll keep it, kind of short and simple. One thing I want to reiterate is something that the pup hit on was, preserving your mental capital. And I think that kind of speaks to the veteran and the, type of trader that, and caliber of traders that we have on this panel, because that's exactly where I'm at as well. I came into this year wanting to trade. I was able to ride a small uptrend from 2021 into 2022. Had some runners, got stopped out, and tried to get back in, and I'm stopped out again. So it's been a day trader's market, and really I'm just waiting for that signal for me to go ahead and get positioned swing long. And right now we don't have that, so I'm enjoying my time. I'm exercising. I'm going skiing. I'm working on some life goals. I'm making sure that I'm still obviously watching the markets and being prepared. But Jesse Livermore said it best in one of his you know quotes, and I'm gonna misquote him, but he said there's a time to trade and there's a time to fish. And I'm not a huge fisher, but for me, there's a time to trade, and right now it's skiing season, so there's a time to ski. So right now, you can catch me on the slopes and being patient, waiting for this market to turn. And when it does, I'll be well rested, well focused, uh, preserving that mental capital and also that capital, that trading capital, and I'll be ready to really attack the market. So when that happens, I'll be ready.
Love it, Blake. Very well said. Words of wisdom. All right, Ben.
Hey, how you doing? let me give some closing thoughts for maybe a lot of novice or newer investors, which I know there are. There must be a lot of people listening who are new to trading here in the last couple of years. And I've been trading for 25 years, and I've been through everything. And a couple kind of tips. First of all, in this kind of environment, you want to preserve your capital because you want to stay in the game. So just be cautious of that. You know, the two biggest mistakes I see beginner traders make, and I did it myself, was number one, over allocation. So you're all in on one stock. And then number two, the biggest mistake, which if you'd learn to change this, it's going to make a big difference for you, is you don't have to make your money back in the same stock that you lost money on. This is like the mistake everybody makes at the beginning, and that's because you have your ego in it and you don't want to be wrong and you want to make money on each trade. A lot of people make this mistake. You got to get rid of that mentality, think about preserving your capital, and think about where can you make money next, right? Don't look at, hey, I'm down, $50,000 on this stock. I got to now take more risks to catch up and make the $50,000 back in this particular stock. That's the worst mistake you can ever make. When I figured out that mistake and I started, doing things differently, say, hey, well, who cares? A loss is a loss. Take my ego out of it. I can be wrong sometimes. Where going forward can I make better return on my money with that capital? That's a huge turning point. It will be a huge turning point for people listening here who may be stuck in the mud right now. I also want to mention tomorrow, I'm going to take the baton from you while you're away and traveling. 5:30 p.m. tomorrow, I'm doing a Twitter space with Vegas right here. We have a segment, we're going to call it Stories with Vegas. I love her trading style. It really jives very much with what StoryTrading advocates for, which is taking a holistic look at the stock, really doing research and understanding fundamentals, catalysts, sentiments, and technical. So I can't wait to get on spaces with her 5:30 p.m. tomorrow to discuss some of her ideas. So guys, go ahead and follow her. Click on her profile. Make sure you're following her so you can jump on the spaces. Make sure you're following us. And that's all I got. Thank you so much for the opportunity tonight.
Very much a pleasure having you on. Great words, well said, and big fan of Vegas myself. Okay, Danny, coming to you.
All right. Thanks again for having me. Definitely a pleasure to be on Spaces with you today. And I'll leave you all with this. So there are times when the market is easier to trade, and there are times when the market is harder to trade. And right now, the market is pretty hard. So for the newer traders, you don't want to trade when the market is hard, but you do want to watch and observe the price action around the indices and your favorite tickers. Keep in mind, this race is a marathon. It's not a sprint. If you treat it like a sprint, you will get burned and you will blow up your account. Pace yourself. Most traders take 18 to 24 months to become consistently profitable. So don't expect to be trading for 6 months and think you know it all, because this market is one of the best teachers in life. It will teach you lessons every single day. And if you don't learn from your mistakes, then you're bound to fail. It's like anything in life. So treat the market with respect, treat your process with respect, treat your system with respect. And if you respect the market and you put the time and the due diligence in time you will find success. So for those youngsters out there that are in your late teens to early to mid 20s, you are a time multi-billionaire. You've got billions and billions of seconds left in your life. Use them wisely, learn, educate yourself. It's not always all about trading. It's about financial literacy. It's travel, expose yourself to different things. You want to be rich, not just in money, but you want to be rich in culture. You want to be rich in life. You want to be rich in surrounding yourself with the right people to lift you up, and remove the things from your life that are distractions, that are taking you away from what's important. Recognize what's important to you, focus on that, and you will be successful in life. So if you're not, then you can't expect to have success in trading if you don't have success in life. The two are intertwined. So that's all I got to say. Appreciate it. Love these Tuesday night spaces. I always try and drop a little bit of wisdom in there. So hopefully you all got that, and look forward to seeing you all in the next one. Take care. Be safe.
A little bit of wisdom from a very wise guy. Love it. Thank you, Danny. Also, I really like the photography picture with the puddle. That was pretty dope. Just want to say. Absolutely. Okay, and coming to my wonderful co-host, Stock Market News, for any closing remarks.
Is it time for a third calendar shout out?
No, please.
I'm kidding, dude. We're chilling.
I did that meme of the draw 25, and what I was gonna do, what I wanted to, I was looking for a picture. So basically, of like somebody, like I don't know, this seems like a scene from like a movie or something, where like somebody just has like their mouth like full of marshmallows, and someone's trying to like stuff another marshmallow in. I was gonna write like me having done 15 calendar shout outs, Stock Market News asking me to do another one, just like trying to like fluffy bunny it.
Yeah, I was gonna say the Fluffy Bunny challenge back in the day. But man, honestly, I'm chilling. I love the spaces. The end to a long
Enough
day. This is our
slices.
5th spaces today. What was that?
It's a TikTok meme where he's like, "Okay, that's enough. It's enough. It's enough slices." Yeah.
God, I could you can kind of tell we've been on spaces for 8 hours now. We're starting to get delirious towards the end. I don't know if anyone heard the end of the Power Hour spaces. That voice changers and that went downhill quickly. But honestly, man, just follow all the speakers that we have up here. We're doing so many of these spaces. You've heard it 3 times, 2 times, whatever it is on the spaces. You're gonna see all the stuff on the calendar going forward. We have 10 more spaces coming this week, so super busy. I'm so excited to be able to continue to do this. This has kind of become the full-time job. Like Wolf was saying earlier, like everyone that we bring up is really up here as full-time traders, full-time investors, really supporting themselves on this. Myself and Gav are taking this spaces stuff seriously. We're full-time Twitter accounts, full-time spaces hosts. As I'm here bobbling and messing up my words, but yeah, we're really out here grinding, trying to get big people on. Shout out to Gav for that huge spaces last night. Shout out to this spaces, this crew, which is always on here every Tuesday. Amazing spaces. And yeah, no, just super grateful that we get to keep doing this stuff. Excited. Big shout out to all the listeners down there for coming in here, hopefully getting some value from this and allowing us to keep it going on it. So I'm back tomorrow. We got 2 spaces going. I know we have the street one at 3, and I know we have another one in there that I'll let you talk into. But yeah, super grateful. Thank you, everyone, and see you back tomorrow. Hopefully, we have a green day.
100%. And yeah, before everybody goes, just a couple of quick stats. Like these last 24 hours have actually been insane. So today alone, I clocked 9 hours and 18 minutes on Twitter already. And we're probably going to be on here for a good amount. Oh, that was just on my phone. 9 hours and 18 minutes on my phone. Probably the rest of the day that I've been up, I've been on my laptop, right? We've been answering DMs. We've been going through those. That's been a journey. Over the last 24 hours, this account has seen some explosive growth and love from the audience. The Wolf account has grown by 2,500 followers in the last 24 hours, which absolutely blew my mind. That's the most we've ever seen in a single time period. Yesterday, we had over
You deserve it, man. Congrats, brother.
Thank you so much. We had 1,167,000 impressions yesterday across our posts, which was, just mind blowing as well. Kind of everything along these lines. So things just continue to seem to, fall into place. I fucking love life. This is a really, really cool opportunity. I didn't see this coming, even like a year ago. We had, again, like a year ago, the Wolf account had like 30 followers. Like this is not happening. And a lot has changed. So really appreciate everyone that's going on this journey with me. Got a lot planned for 2022, not just, with Wolf, but in a lot of different areas. I want to really, as the kids say, fuck some shit up and build something huge. So with that being said, we're, 9.5 hours deep into Twitter today. Probably going to be doing some more commenting, responding to DMs. Thanks to everybody that's in the DMs asking for the calendar. I will get you on there. I will be back on Spaces tomorrow for 2 really cool spaces, so a little bit less. But at 12 p.m. EST tomorrow, I'm going to be doing a space called Woman and Web3, and I will be highlighting. So on that space, you can see these all on my pinned tweet as well, so that's a good place to go for it if you're interested. That space is going to talk about Web3, so, crypto, NFTs, blockchain, stuff like that. and focus exclusively on, how we can get more women involved within it, from the perspective of women who are leading that charge. So my co-hosts are going to be the Blonde Broker and Ashley Decan, and the speakers will be Bitcoin Baddies, Dahl, that's Daki Robinson, and Morgan Sarkissian will all be on that panel. So definitely come and tune into that. That's actually 1 p.m. EST. My bad, 12 p.m. CST. And then on 3 p.m. EST, we always have Stock Talk with the Street that is hosted by the account at The Street. And then we will have Catherine Ross and Stock Market News as the co-host, and then myself and a number of other speakers that tune in as speakers on that panel. We talk macro, micro, what's going on with the market. And then you heard there is going to be that space afterwards that StoryTrading in Vegas will have. And then Thursday, I will be literally going from basically market open until the nighttime. I will have live option trading, long-term investing. I'm actually bringing on Thursday one of the very original employees at Twitter Spaces, and I'm going to do a one-on-one interview with them live on Twitter Spaces. I'm going to be doing crypto staking, NFT talk, and so much more. So a lot to come. Very exciting to have this opportunity. I think I'm going to go eat something and maybe close my eyes for a minute or two, and then we'll roll into stock picking. We're going to do a max of 3 stock picks with the same time limit, around 4.5 minutes. If need be, everyone was really, really good on those last time. We made all the quotas just so that we're keeping things on an organized schedule and movement. And then we'll go into just closing comments, final remarks towards the end. But I think everybody's got the gist of things, so we're going to jump right into it. Mr. Danny Nas, you've been with us all day. You've been a trooper. Thank you so much for being on here. Would you like to kick us off?
Of course. Great to be with all my friends here on Tuesday night. Wow. I mean, it's not to say that we can't expect this. I mean, growth in tech stocks have just been getting hammered, absolutely hammered. And the difference now is the money is rotated out and it's not rotating back in. And so, really, my eyes have been elsewhere. I'm not really even looking at tech from a swing trading perspective. Maybe day trades, taking some action to the downside. But yeah, I think we're just at this kind of juncture where this was kind of in the cards. This was gonna happen, so no one should be surprised. 2022 is going to be a very, very interesting year with the rate hikes, with the looming coronavirus. We have midterm elections this year. So there's going to be a lot of interesting developments throughout the year. Now there's some geopolitical noise with Russia. So, this is going to be a very, very noisy year. And I think we're just seeing the beginnings of an inkling of the beginnings of what to expect this year, which is one word: volatility. And, I think, we had SPY close right on my target to the downside today at 456.23. We closed at 456.51. So it held the back test, but it did lose that low swing high, or excuse me, that swing low, previous swing low anchored VWAP. So not really that great for SPY, and the Qs just look even weaker with a double top confirmed breakdown now under the 50% Fibonacci retracement. I do have a target to the downside on SPY at around 354 to 359. So we still got a little ways to fall, I think. There's always going to be some shining lights in the market. The ATBIs, SoFi got its bank chart. I'm sure we'll talk about that later on. But as far as the indices and the ETFs, really, I mean, the only thing I see that closed green was energy, and energy's been pretty strong for about 6 weeks now. So that's where my eyes are really right now. Everything else, you could take it to the downside. I don't personally like